The second quarter of 2022 continued the same way as the start of the year. War in Ukraine, coupled with a global energy crisis, put pressure on markets and saw inflation reach record highs. Although bonds usually offer safety in bad times, this wasn't the case in the past 3 months. Across the world, many central banks have raised interest rates to combat the inflation threat, leading to bonds losing value too. The AJ Bell funds seek to insulate from some of these inflationary pressures through our use of sectors, which track different parts of the market. This means that some of the companies we invest in have earnings linked to inflation, such as consumer staples and infrastructure. We also have positions in inflation-protected bonds. This means that some of the bonds we hold pay interest linked to inflation rates. In addition to this, most of the bonds we hold within the funds have shorter durations than average, meaning we can reinvest them more quickly when rates rise. Inflationary pressures, particularly in energy, as well as supply chain issues following Russian sanctions, have had a negative effect on the economy. This has been reflected in global share prices of publicly listed companies. Previously good performers, such as technology stocks, have been very badly hit over the last quarter. The UK stock market, although losing value, once again outperformed other regions. As interest rates rise, investors start to favor companies that return cash quickly, so-called value stocks. These companies, which have low price earnings ratios, are typically heavily represented in the UK. The UK market also has a high concentration of energy and commodity stocks, which, despite not rising as much as last quarter, also gave it a boost too. Elsewhere, investors and responsible funds once again had a tough quarter. This was in part due to the lack of exposure to mining and fossil fuel industries, companies which benefited from the current economic conditions. However, some companies that focus on ESG, that's environmental, social, and governance credentials, are currently unprofitable and valued on future growth. This means that they're more sensitive to rising interest rates than other stocks. These are uncertain times for investors. The team here at AJ Bell retain our conviction in the funds and will, as ever, help to keep your investments working for you. Thank you for watching.